slow driver because we all know he's not at the wheel.
My show. Listen, Tony, this is the house that you built, my friend. Okay, I'm a guest in the house that you built, and we both know it. Tony, how was your weekend, man? Were you out and about like Tom?
Yeah, I do the American thing, smash burgers now instead of regular, hamburgers or cheeseburgers. I throw the Italian spin on it, so I got the Italian sausage instead of the hot dogs, and ribs, man. I mean that's it. You make it your own. So that was my day. A little pool time. Got my grandson over. Got my son Nick here. He might make a special appearance if he gets out of the park fast enough. So it's a good day, man. It's a good day. It was decent weather here in Chicago, 60 degrees, kind of sunny. End up working out. End up working out. How about yourself?
That's an American Memorial Day.
Yes.
Me?
Yes.
Me? Myself? I spent it learning Mandarin. I'm getting ready.
And I don't think that's a joke either.
Tony, you got to get ready. So, what is it? Stay ready so you don't have to get ready.
That's right. You're 100% correct. I'll give you that.
When the cat's away, the mice will play. Let's talk about the best president there ever was. No, I'm just kidding. Let's get right to it.
You're a nasty young man.
I know. I'm going to get fired pretty soon. Tony, the S&P 500, 58.91. They rallied them a little bit. Futures did open already, so the suspense is over with the open of the show. 58.91, 21,200 in the NASDAQ. We got NVIDIA earnings coming up this week. If I would have told you like a month and a half ago, Tony, when everybody was freaking out, you were just as cool as the other side of the pillow, to use a Stuart Scottism. If I would have told you a month and a half ago that they would be trading at 5,900 and vol would have dipped down to 16, we're back up to 21. Would you have believed me that we'd be trading back up here at 5,900?
Man, no, not this quick. I was definitely more bullish than Tom has been as of late. I've actually been in the matrix, as my son likes to say, for the last week or so. The prior week before that, I was not. But the last week or so, I've been hitting on all cylinders. I said Wednesday after expiration last week, volatility expiration, that we would get some weakness in the market. And like clockwork, we got some weakness in the market. And then when Trump came out with the tweet, I said, you know what? I hate these artificial moves. You got to kind of fade them. There's nothing to them. It's all, fire and brimstone kind of thing. And that worked out. But I didn't think to this magnitude of the move. This is, I don't want to say too easy, because it's never too easy. But this is making geniuses out of a lot of people who may have said something similar to like what I said. No way did I think we were going to be here. No. To answer your question, no.
When you were back on the floor, Tony, you guys, what I love about you guys is none of you care about the news. Like, none of you felt you had to have the news, a news outlet. All you had was price, and you're in a pit full of people. You didn't have Twitter, though, and you didn't have a president that was making policy by tweet. Do you think if you're back on the floor right now, you got to have at least, okay, I don't need the news, but at least put Trump's Twitter feed up somewhere where we can all see it in the pit?
Yeah, 100%.
Like that's a must-have.
Yeah, 100%. Times change, man. Listen, I remember when there were no TVs in the pit. Like, we didn't have any TVs. And then they installed TV. Like, it was illegal to have a TV. And then they allowed TVs so that everybody could see them. So then they had them in the pit where everybody could see the TV. Then most of the time they had the Cubs game on, but you could get any kind of news that you wanted to there. It wasn't like a Bloomberg terminal, but any kind of regular terrestrial TV news. So yeah, now I think times have changed. I think I think to stay ahead of the curve, you need that for sure.
Give me two things, my friend. Mm-hmm. I need Donald Trump's Twitter, and I need Nancy Pelosi's trades. If I have those two things, I think I'm going to be okay.
you could be okay. Hey, even the S&P just opened. It looked like they opened basically unchanged, which is about 70 handles higher, right?
Yes.
58.87. It looks like.
Unched bonds at 111 and 14 ticks. Energy not doing much. Nat gas down a little bit more than 1%. Not super eventful.
Volatility down 5%. I don't think that's odd either on this kind of move. Talk about /VX, the futures.
All right, my friend. Let's
what
keep
about?
this
How
thing.
come you haven't mentioned your Bitcoin yet?
What do you mean?
Well, I mean, you're a younger man than I am, so I figured, you would be quoting Bitcoin all-time highs, new highs. I mean, I know they're $2,000 off their highs now. What's your take on Bitcoin? I made a statement that I think more people care about Bitcoin than they do about gold.
Ooh, that's kind of controversial. I think when our government is printing money like Tic Tacs, when the fiscal conservative Republicans are putting together budgets that add $4 trillion to the deficit, I think it's not crazy that people are looking for scarce assets to try to protect their purchasing power. And whether the problem with real estate is that everybody and their mother owns 15 Airbnbs, so you've got a general overinvestment there. And when that's the case, 21 million Bitcoin start to look pretty good. And I think we're at 109,000 in that ballpark, and the Uber drivers aren't talking about it right now. So you know what that tells me, Tony? You know what that tells me? 150,000. 150,000. When you make new all-time highs, and not a single person driving a cab or Uber is talking about this thing yet, you're still probably in the accumulation phase. I know that's a stupid anecdotal thing, but there's some weird truth to it. You know what I mean? That's what I think.
I mean, it's almost like it's almost like consumer sentiment, right? I mean, you're not that far off when you're looking at what I mean, that's as public as it gets, right? I mean, that's the way I would look at it. I don't have a problem with your statement.
No, I just think I think it's a sign of the trust people have in the, and whether it's gold at 3,300, or whether it's Bitcoin at 109,000. Or whether it's copper starting to make a move, whether it's silver starting to make a move, whether it's platinum, anything you can't print more of, it's all the same story. Mm-hmm. And I don't know. What do you think? What do you think of that big beautiful bill? Did you comb through that over the weekend?
I didn't, but I did use ChatGPT to summarize it. You actually gave me that idea, and I said, you know what, this is an excellent idea. Now, I'm trying to get it to talk to my wife, or how I should talk to my wife. I don't think I have enough input into it, Vic, so I don't think you can use it yet either. Because if I can't use it, you definitely can't use it. So for that purpose, but I did put it in there, and I thought it was pretty. I don't know if it's again, I don't know if it's 100% accurate. I'm sure it's not. But it gave a good, synopsis of the bill. So
is that the best way? That's the best way to use AI. A 1,118 page bill. You know what? I got stuff to do. It's Memorial Day weekend. ChatGPT or Grok. What the hell's in this thing? That's the best way to use it.
Absolutely, and it was your idea, and I will do that often. So thank you. It was a great idea. Not only with that, with other things. I mean, it was a great tool, a great tip. Really was.
Speaking of $4 trillion in spending, what do you say we get Pete Momet in here on First Call to talk about the impact to bonds and the long end yields? Pete Momet.
Gentlemen, so Tony, was the synopsis more big or more beautiful?
It was a little of each. It was pretty big and beautiful. It
was big. It was beautiful.
It was big. Yeah. It was beautiful. Size is subjective, Pete. You know that.
That's what I keep arguing, and it's not a winning battle. So it'll be interesting to see if
one investor's floor is another investor's ceiling. You know how that goes.
Very much so. So yeah, on that, Victor, we saw bonds touch 110 briefly last week. Interesting point right around there in terms of just. It's probably a little bit getting too much in the weeds, but the way futures are quoted, they're quoted off the cheapest to deliver bond. And it causes a little bit of volatility when you move to that next cheapest to deliver bucket. And that price sits right below about 110. We tried it. We didn't. We bounced back a little bit. A huge pullback here, but tape action-wise, I don't think the market's actually acting particularly great. I mean, bonds seem to be completely detached from anything else. The correlative nature of this too, and when I talk about bonds, I'm talking about both the short end and long end of the curve. We saw twos flattening on twos rallying and yields falling in the 2-year on equity down days, but bonds, equities up, equities down, bonds continue to get sold. On a value basis above 5%, yeah, they're cheap. They're absolutely cheap. But I think we probably, in all practicality, we're not going to see what this bond looks like, what this bill looks like for 120, 150 days yet. So I think the consensus is that the level setting of the whole exercise was they're willing to accept $4 to $5 trillion at a minimum of additional debt. So it becomes, and I think you talk about what's the new gold, and I agree with you. There's a lot of substitution going on here. And is that substitution at the expense of treasuries? I think so. I think there'll be a new attempt to set level, and it's got nothing to do with the grade change. I mean, are you more likely to get paid by, I think I noticed that Microsoft 30-year bonds are actually trading under 30-year U.S. treasuries in terms of yield, which in the scheme of things, you're going to get paid by both. But who are you more likely to get paid by? And does it make any sense that 30-year treasuries are trading a higher yield than AAA corporate treasuries? It's a little bit of dislocation.
That's an interesting. Has that ever happened before? I can't imagine that it has.
No, I can't, and I'm sure there's some, there's sentiment as well as positioning around these things that the grade change starts to affect. But just when you think about that, part of me from, just the lack of us being able to sustain any type of activity in the upper, what I call the upper half of the range, which would be anything above 114, 115, makes us think we go back and test 110. But when you look at the dynamic, like I just cited, it's like, well, this doesn't make any sense. How can U.S. Treasuries be riskier than any single name entity's equivalent bond? So there's a case to be made for both sides here, which I think we'll see a lot of back and forth. If 110, and it's not because it's a big round number, it just happens to be, if this bottom level holds over the next couple of days, I think some of the push to see if we can expand that lower will ease a little bit, but I don't think it has much of an impact on U.S. equities. It seems to really be immune to it. It does, though, I think, and if we run some short-term correlations, and we actually just did this within the world of FX, the long end of the curve is correlating much more in a negative way or a yield-based way to Bitcoin, to the dollar. We're seeing that, okay, what if treasuries aren't being held? What's the substitute? Is it gold? Is it base metals? Is it digital assets? And I think that is some of what we're seeing unfold here in different forms.
Take us into metals for just a bit, Pete. At 33.72, are you a little bit surprised at the quote-unquote resiliency of gold? Or do you think the fact that it keeps making lower highs, that this is a trend it's still pointed to the downside in gold, even though it's trying to fight it?
Yeah, I think market structure wise, yes, I think we're at that point now where we're going to get rallies here. Copper is kind of grinding back up to $5. Silver's holding in. Gold silver ratio wrapped right around 100, which we all know is rich, but we were at 106 a couple of weeks ago. I think gold will continue to, we're not going to see a trip right down to 3,000, but I think these rallies that we get are interesting places to add a little bit of short delta here. And rather than just leaning on the futures, I'd rather sell the premium up here. The IV rank is still good. You collect a decent amount of premium and layer into some short calls or call spreads here. Really makes sense to me. You can work on, and I know we all try this, legging silver against it if you want. That's right now, though, at 100, it's rich, but not at the upper end of richness. So I'm not inclined to buy silver against this. I like the gold shorts as part of this, but I'm also mindful of platinum rallied again. If you go to PL. Platinum, not out of nowhere, but it's really been the dog in the show. Historically, platinum is traded anywhere from $200 to $1,000 above the price of gold. So why are we seeing $1,000 platinum? Well, a lot of different reasons, but platinum really kind of out of nowhere. You talk about picking up the dogs. Copper's back close to $5. Silver's holding on. Gold is stubbornly resilient at the upper quarter of its range. They came for platinum last week in a big way, up almost $120. So it'll be interesting to see. I don't want to get that stubborn being short if everything is still holding on to the bulk of the gains, and you're seeing stuff like platinum that's gotten no love actually start to exhibit some strength.
Tony, how much platinum you got buried out in the backyard over there?
Zero.
You've never been in the vault before, below the pool? Victor, you've never seen the vault? It's unbelievable. Oh, my God.
He never takes me to the vault.
You think you've got a good vault? You've got silver on one side, food on the other. You should see his. It's incredible. He has got the ultimate vault. But so I think they're tradable right now. I think all these things like platinum, this is a rally that, as tempting as it looks, I've got no interest in selling. I think they're going to take this out for a little bit of a run. I don't want to buy a $100 rally either. But I think other things like gold, if we get back up to 490, and copper, that's interesting. Vol's still good in there. If you want to play some of these metals, play against some of your, we've seen them really sit up and be, correlations between gold and equities, even gold and the dollar, which has been historically, especially some of the commodity currencies, has been relatively robust, really broken down. So we're seeing correlations not necessarily hold. And I think looking at them as independent occurrences, I think adding some short delta in gold here and copper, irrespective of which way I'm leaning in on the equity side.
I'm going to ask you, what do you think about the dollar as sort of a complement to the metals discussion? But before I do, Pete, do you think we'll have a balanced budget in my lifetime? Do you think while I'm a living, breathing being that I will ever see a 1 year of a balanced budget? Do you think that'll happen, Pete?
1 year? Oh, not just us actually getting back to.
No, absolutely not.
Yeah, of a balanced budget. Hey, sure, anything's possible. Yeah.
Hey, we had a balanced budget in the early 2000s.
We did.
And then George Bush sent us all those tax. Well, I don't know what stimulus. I don't know what he sent.
Yeah, stimulus checks or something.
I remember.
Right.
I remember my mother was a lifelong Democrat. Those checks showed up in the mail, Tony. My mom goes, George Bush isn't so bad. Incentives. What do you think about the dollar here, Pete?
You know what? Same thing here too. We actually saw some of the weaker parts, Kiwi dollar, Aussie dollar. Move up to 136 in sterling is new ground. We haven't seen that in a long time. Euro's holding on to 114. We had a good pullback in euro, but Aussie. And again, you talk about whether it's the inflation plays or the moving away from fixed assets like interest rate bearing assets. I think some things like Kiwi, Aussie benefit from the uncertainty. I think euro is, again, we had a great run, a reasonable pullback. 400 pips down in the matter of 12 trading days is great. We're going to grind back up into that range. I think it's going to take a lot for us to break through 115 again. But this I treat a little bit like gold. I'm willing to sell these rallies, and I'm mindful of what I don't want to sell in a rally. Things like Aussie, things like Kiwi, I think have more room to run to the upside. Yen, which is not, yen had, I think by percentage, probably the strongest week last week.
Yeah, one of the biggest. Yeah.
Sure. And again, it's supposed to be the safe haven currency. Well, it's not quite working that way right now, with equities holding on to so much of their gain. We're seeing, when we look at yen here, or we look at in spot terms, we're challenging 140, 142 right now. We're sitting between that level. That's been kind of an inflection point where dollar yen, or when you think we look at it in futures as yen dollar, it's just the reciprocal. That's been the upper end of a huge range, 140 to 160, where we've traditionally seen yen between 100 and 120. So it's interesting that the risk on, risk off piece isn't playing through yen here. Yen seems to really have a little bit more consistent interest on it on the long side. This is one too. Upper end of the range, biggest rally of the week, but not the one I'm interested in selling.
Going into the week, question for both of you. I'll start with you, Tony. What do you think about equities here? It's pretty decent earnings this week. NVIDIA earnings, obviously. What do you think about? How do you position around equities?
I mean, look, you look at this rally that we've had now. Especially after the wax on, wax off tariff problems and it's self-inflicted, as Tom would say, tariffs that we've had here. And you gotta think that we are climbing the wall of worry here. So for me, and not because we're up 70 handles, I think I said this on Friday, I said it on Thursday. I thought we would hit 5,800. We went a little bit below, I believe. And I said next stop is 6,000. So I'm gonna stick with that. So I just think 6,000 round number. We've got to see it. We climb the wall of worry. I think the market likes the slop, as Tom used to say. Volatility will be under 20 by the middle of the week, right before NVIDIA comes on. I'm talking about /VX, and then we'll see what NVIDIA does. That could be the canary in the coal mine for some of the market here. So I think we'll wait. I think we're smooth sailing up until NVIDIA, and then it's anybody's call.
What do you think, Pete?
Yeah, same thing. I think we've run awfully far, awfully fast. I think there is a sense of interest of you look at the makeup of who's buying stocks right now, and I think there's people who are probably not properly positioned. I wouldn't be surprised. I don't think we're going to new highs. And I think this kind of plays out in the same fashion. I think we get a little bit more continued strength. I think this rally, when we opened up Sunday night, we rallied from basically unchanged Friday to up 70 handles, and we then up 40 or 50 and put on another 20 in a very thin holiday market. Traditionally, Victor, right around 2 o'clock in the morning, 3 o'clock in the morning, our time in Chicago, when London comes in, they tend to knock all that out. Now, if they don't, if we're not back to wrapped around maybe 30 handles higher to unchanged, maybe there's another leg or two up, but I've got a feeling this is probably going to get shaken out in the next 24 hours. But I'm not incredibly bearish at these levels, but right now I just actually sold some spoons in NASDAQ right at these levels.
Victor, give it to you. What do you think before you bring on Chris?
I'm leaning a little short here. I just think, would it surprise me if we creep a little bit higher? To your point, Tony, I think this is the rally that people love to hate. I think there's probably still too many people that are positioned. Either they're not long enough, or they're short, and that makes me nervous. When I see that happening, I'm like, okay, another 200 points to change the sentiment, and then we can get a little bit of a puke. I still think this is the rally that people love to hate, but to your point, since the middle of April.
I mean, I was saying that on our show. The most disrespected. It was the most disrespected rally by the media that I've ever seen in my career.
I agree. I think after 5,600, I don't think people. You were late and you didn't pick up anything at 5,000, and now you've got to chase.
You got to make a hard decision, right?
Yes, yes, and I think. But me personally, I don't see a ton of value here at 5,900. That's all. So, if we want to climb 100 points higher here, it's going to get there without me. I would love for us to puke them, get down to 5,600, and then see what's what.
Hey guys,
then I can release the hedge.
Speaking of value, I've got the Batista. Let me see if I can show it here. It's not coming up. God darn it. My pool pass. Does my pool pass include? It's the silver. I didn't go platinum this year. Do I get holidays like Memorial Day?
Excludes holidays.
Thought so. Okay.
That's the only thing you don't have. You have everything except holidays.
Next year.
By the way,
all right.
I don't even have a pass, my friend. At least you've got the pass.
No, you're
at least
VIP.
At least you can go on non-peak days and hours. Okay.
Under 60 and after 5.
Pete Moman, everybody. Thanks, Pete.
Have a good night,
Pete.
guys. Bye.
Yeah.
I got an extra special guest for you, Tony. Are you ready?
I am.
Oh, I don't think you're ready, man. I'm ready to run through a wall right now. Everybody, we've got an extra special guest for you this Monday edition of First Call. Welcome to First Call, Chris Vecchio. Chris, how you doing, my friend?
I'm doing well, filling in for Ilya. Not sure how special that is, but solid Memorial Day to you.
You've got the quarter zip all the way open. I don't know what is the.
This is not all the way, Victor. Come on, give me
what's
some
the
credit.
meal of choice in the Vecchio household over Memorial Day weekend?
Don't lie.
After this, grilling some chicken thighs, bone-in, skin on, of course. Some trout for my wife and daughter. Pineapple and zucchini.
This is what's wrong with our country now, Vic. This is what's wrong with that. Right there is what's wrong with our country, Vic. That's it right there.
Yeah.
That's it. That's
You ever been to a Brazilian steakhouse and they come over and they're like picanha and you're like, yes, obrigado. And then they come over with the pineapple and you're like, yes, obrigado. Grill pineapple, Tony.
I'm not.
I hate.
Go to a Fogo de Chao and
I hate
grill
those
pineapple.
Brazilian steakhouses. I hate them.
Well,
I'm always looking
too.
at dude like I'm always looking at those guys like what? Stop coming over here, okay?
so you like Tony's pool,
Trying to
but you don't like
There.
Brazilian steakhouses. Okay.
Yeah, I do not.
Okay.
A bunch of Brazilian guys coming over with slabs full of meat, offering it to
And-
my
and
lady.
knives?
Absolutely not. Get the hell away from here. We'll take the salad bar, please.
You would be the guy who fills up at the salad bar at one of those steak buffets.
Yeah.
Gotta watch your macros.
How many hot dogs did you eat this weekend, Chris?
None so far.
That's a lie, and you know it. You were fisting.
Actually, no, you're right. Last night I went to my parents.
Buffet.
I went to my parents' house. We grilled, and I had a hot dog and a hamburger. Yeah.
See, your parents were raised right.
I'll take 2, Pops.
Thanks, Dad.
All right. 50% tariffs on EU. For or against? Chris Vecchio, go.
Are they happening? Schrodinger's tariffs. They're on. They're off. Who cares? I mean, did you see the reaction last week when they were announced? The market was like, yeah, we're down-ish. Yeah. We know you're going to put this back in the bottle. Just get it over with. So the life cycle of these are becoming shorter. The half-life, if you will, is diminishing. But I think the greater point is that at a certain point in time, the market's going to demand some bite to one of these barks, lest it become, as I think it's become, as you and I have discussed recently, a boy who cried wolf cycle again, like January, February mindset. And it feels very much like we're back in that. So I'm with Tony. I think that this first half of the week, there's not much by way of U.S. economic data. Powell's not speaking. We're looking forward to NVIDIA as the major macro event of the week. And I question, what can NVIDIA offer us? Because the whole shtick has been you beat handily, but then you have to offer some stronger guidance. And as we've seen time and again from companies, doesn't matter what sector, they have a very difficult time offering any semblance of positive guidance. So NVIDIA being a semiconductor company that's very much in the thrall of some of Trump's tariffs, what could they possibly tell us that makes us feel comfortable about the future? So Wednesday could be a turning point. Maybe we rally into it and then sell off in the second half of the week.
I like that. Tony, what have you thought about just earnings in general, this earnings season, playing binary events, selling vol into this earnings season? What have you thought?
They're not my forte, but I have a partner who plays them all, even though he says he hates them when he doesn't make money and loves them when he does make money. And if he goes through an extended period of time of not making money, he says, I'm never going to trade them again, and then trades them the following quarter. With that clear message about earnings, I abstain from them. I usually, if I have a position in a stock that has earnings, I pull it out to the back month. And that seems to work pretty good for me, not for the earnings collapse of volatility, but just keeping my position on making a couple of dollars back on a position. It's usually got a good position if I have one on going into earnings. I like to take off winning positions going into earnings. They've been good for Tom. So they've been inside the expected move, to Chris's point of view. Everything seems to be we did good, guidance is X, and the stocks meander around a little bit. So it's been a good earnings cycle for selling premium. I'm going to imagine, I'm looking at nvidia right now with a 30 IV rank. That scares the crap out of me because it's not high enough. And for it not being high enough, it could give us a surprise one way or the other. Doesn't have to be down, doesn't have to be up. So that puts me on my toes for Wednesday.
A message of complacency and a rare message of abstinence from Tony Batista.
Yeah.
Going back to you, Chris, big move in nuclear last week, given some of the announcements out of the White House. So I've got CCJ up on the screen, but I could pull up SMR, which is a smaller, more high beta name. I could pull up URA, which is a uranium ETF. I could pull up a handful, but gigantic moves in the nuclear space last week.
That is true. The executive orders were announced. I want to square that with some of the legislation that's being proposed right now. The Trump tax bill that just passed its way through the House would actually make nuclear credits and grants more difficult to come by, if not trimming down, wholly eliminating some programs. We talked about this on Wednesday's The Price of Truth. So we did hear this weekend that Ron Johnson, the senator from Wisconsin, was discussing how he couldn't let this particular tax bill pass. So maybe there aren't the votes.
Ron Johnson's doing God's work.
Well, you said it, not me.
I hope he doesn't fold like a cheap tent by Wednesday.
Yeah. Well, what in particular do you like that he's pushing back against? Because as a New Yorker, Tony, as an Illinoisan, I suppose that we're happy about the salt cap change, but
no, man, all of it, all $4 trillion of it, send it back and redo it.
Oh, you want a Clinton budget? Okay, all right.
Yeah, bro, that's not this. I didn't vote for exploding the deficit. That's not what. I don't know who the hell did or who thought they were voting for that. I know the incentive structure points towards this direction, but it's like, how do you go from let's doge $1 trillion into the budget to let's explode the deficit by $4 trillion? How does that happen? And then how does everybody just stay quiet about it? You can't be on both sides of those spectrums. You can't be happy when you're like, yeah, let's cut the deficit, let's find $1 trillion of wasteful spending, and also, let's
$2 trillion
to the debt. It's like you can't be happy on both sides of those spectrums.
Musk is saying that he doesn't think any of the significant deficit spending's coming. The only way that the U.S. is going to be able to beat the deficits and debts is through a gigantic productivity boost, right? And to me, that says we're going to be running it hot. Like Biden ran it hot, and that obviously had consequences. So there were a lot of people, even hate to give him credit, Larry Summers at the time, said there were warnings. He warned against running it hot, and sure enough, the consequences were born: high inflation, yada yada. Trump's going to run it hot, it seems, Victor.
Yeah, it looks like it. It's like we tried it for 100 days. we tried fiscal responsibility for 100 days, and they all said, "F this."
I'm sorry, Elon has to go back. Elon has to go back to work, ladies and gentlemen. I did it for 100 days. I gave it a good shot.
You guys
best I can do is $20.
Yeah, here's $160 billion. Now stop blowing up my dealerships. The other thing, other announcement was that the U.S. deal is going to be allowed to go through. And U.S. Steel popped to $54.
That's good.
I don't know if there's much to say about this, but any quick thoughts on this, Chris?
Yeah, I think when it was denied several months ago on your show, I called it a policy mistake by Biden. So I'm happy that Trump's allowing it.
All right, going into next week, what are either the stories, the economic announcements, or the instruments that are on your mind, Chris, as we wrap up here?
Yeah, so I obviously do want to keep an eye on gold because so much of my personality and identity is tied into being long gold these days. This is a small step back. Small step back here at the start of the week because of the tariff announcement on and off again. But it's that Michael Scott snip, snap world we live in that allows gold to retain its footing. I'm a bull above 3,200. I'm okay with short-term pullbacks. I think just being long gold is a good move. I retain my long-term long gold positions in the tastylive follow account. There are long call spreads on. I like metals exposure. I'm going to have to disagree with Pete here. I do have long calls in gold, in silver. I have short put spreads in copper. It's been working. I'm not one to turn the ship quickly. So that momentum remains, and I'm going to plod forward that. The dollar weakness here is not giving me any reason to get off the metals train in the short term, Victor. I am watching what's happening with bonds, though. My interest was piqued when you guys were discussing what was happening with some of the debt in the market, like Apple, for example, seeing that its corporate treasuries are trading below U.S. 30-year yields at this point in time. That's not the case broadly speaking for much of the market. You can go onto the St. Louis Federal Reserve's economic database and look up AAA seasoned bonds, which are corporate debt with 20-year maturities plus, and you'll see that those yields in general are still above 30-year U.S. Treasury yields, but it's pretty darn close. That spread's pretty tight. So what happens next? I mean, if it's like when we saw this kind of situation in 2020, we're probably going to see the spread widen out, but that means yields moving up in general because yields in the U.S., the last time we saw a situation where corporate debt in various companies was trading at yields lower than U.S. Treasuries was March 2020 through July 2020. And yields in general went up thereafter. So I don't know if this means this is a great place to buy treasuries, although 5% on the 30-year is certainly alluring. We are also in a territory, Victor, where I would point out that the Fed ratio, the difference between the earnings yield on the S&P 500 and long-term U.S. Treasury yields, has flipped, which means you get the same return in holding long-term U.S. debt with theoretically less risk than holding stocks at this point in time. So maybe that helps carve a bottom in here for bonds. I killed all my ZB exposure last week after that terrible 20-year auction. I'm still directionally neutral in notes. And that's it.
All right, Victor, I let Christopher talk. I mean, I got little Sosnoff here. He has something he wants to say. Say something.
Well, I'm filling Ilya's shoes here tonight, Tony.
Say something. He doesn't know any words yet, ladies and gentlemen. That's all you're going to get from him.
What a cute kid. All right, everybody. From on behalf of Tony Batista, the Little Saws,
Mini Saws,
Pete Molmat, and everybody here, we appreciate you listening in. Make sure you hit the like button before. Actually, Tony, before you get out of here, where do you lean this week? Where's the opportunity? Where are they overextended?
Oof, great question. I would like to see a little bit more. For the market to do better, I would like to see gold go down, and I would like to see some stability in our bonds. So I would like the opposite of what Chris wants, I think, at this point. I also would like to see our dollar get stronger, just because I think it would help the market. So I'm all for the market right now. That's the way I look at it.
I'm on the Batista train. If bonds get back to 117, my friend, we're going to Sizzler. That's what I know, Tony. We're going to Sizzler, baby.
And you mount whoever's listening.
And if silver breaks above 34, one of these days, we will also get a Sizzler. All right, everybody out there, hit the like button, subscribe to the channel if you haven't already. We will see you back here bright and early, 1:30 a.m. Central Time. The content starts, so no matter if you're in the U.S. and you can't sleep or you're somewhere across the world, tune in to Tasty Live, and we've got you covered. We'll see you back here tomorrow, everybody. Same great network, only on Tasty Live.
Peace, everyone.
Happy Friday, everybody. Welcome to Trade Live with I.